Every empire swears its money is safe. Every government insists its promises will last forever. Yet every time, history proves them wrong. From Rome to France, from the Confederacy to modern Lebanon, people have woken up to find their savings worthless, their salaries meaningless, and their futures stolen by systems they thought were solid. Collapse is not an accident. It is not rare. Collapse is the rule. We build our lives on the illusion of permanence, on the quiet belief that what is printed today will still hold value tomorrow. But permanence is a story we tell ourselves to sleep at night. The question is not if it fails. The question is how you survive when it does. The first lesson of history begins not with ruin, but with confidence. The Byzantine Empire, the eastern half of Rome that outlived its brother by 1,000 years, was built on gold. Its coin, the solidus, was so pure that merchants from Alexandria to Venice accepted it without question. For centuries, it was trust made metal, a currency that outlasted kings, wars, and borders. But trust is always the first metal to corrode. To fund ambition and war, emperors began to stretch the gold thinner. They mixed cheaper alloys and pretended nothing had changed. The numbers stayed the same, the weight stayed close, but the essence was gone. At first no one noticed. Then merchants hesitated. Then trade slowed. And when the truth could no longer be ignored, the coin that had anchored the Mediterranean became fiction. Debasement destroyed trust. The empire's credibility dissolved grain by grain until its money was no longer money at all. Those who believed the illusion, that value could be stretched without consequence, lost everything. Those who doubted early, who held real gold or land beyond imperial reach, preserved what others watched vanish. Value flees to what is real. When money is diluted, trust evaporates. If Byzantium fell through the slow poison of debasement, the next collapse came like lightning. Between 1347 and 1351, the Black Death erased half of Europe. Cities emptied, markets froze, fields turned to weeds. Yet even in that darkness, another pattern appeared. When people vanish, labor becomes gold. Survivors demanded higher wages. Food and land, once scarce, now lay abandoned. Families that once served could suddenly own. Collapse did not end the game. It reshuffled the deck. History called it tragedy. Economics called it transfer. Scarcity rewards survivors. The few who remained, with silver, goods, or simply the ability to work, rose into the gaps left by the dead. The powerless became landowners. The trapped became traders. The survivors rewrote the hierarchy itself. And centuries later, the same rhythm returned, not through plague, but through panic. During the COVID pandemic, the modern world shut down again. Factories went silent. Supply chains broke. Governments printed trillions to preserve the illusion of control. But crises never reward equally. While some waited for rescue, others prepared for opportunity. As fear spread and prices fell, those with liquidity, cash, credit, reserves, bought assets that others were forced to sell. Homes, stocks, and entire companies changed hands. The poor sought survival. The prepared found leverage. The pattern never changes. Only the form does. Liquidity buys opportunity. Crisis rewards liquidity. Collapse is not a moment. It is a mirror. It shows who trusted too long and who prepared too soon. It is not an ending, but a sorting. And when the illusion cracks, only those who understand its rhythm remain standing. Collapse does not stop at coins or contagions. When trust moves from gold to paper, and from paper to institutions, the pattern deepens. And what falls next is the system itself. When money collapses, the next thing to fall is trust in the system that created it. Empires can print coins, but they cannot print faith. Once confidence cracks, even the strongest institutions become hollow shells, grand facades built on borrowed time. The first proof came in Florence, the city that once ruled the financial world. In the 1340s, its marble palaces and merchant banks defined European wealth. The names Bardi and Peruzzi were spoken with reverence. They financed kings, armies, and empires. Their reach stretched across borders. Their letters of credit replaced gold. To the people of Florence, these banks were not just institutions. They were the system itself. But systems always fail where profit outweighs prudence. Across the Channel, King Edward III of England borrowed enormous sums to fund his war with France. He promised repayment in gold, backed by the English crown. But when the war turned and the treasury emptied, the king defaulted. The crown kept its throne. The banks lost their gold. One letter of default shattered the illusion of safety. Depositors rushed to withdraw their funds. Accounts froze. Families who had trusted the banks lost everything. Florence, once Europe's financial heart, sank into chaos. The same voices that once praised those banks as eternal now whispered that they had always known the risk. Too big to fail is a lie. Institutions exist to profit, not to save you. Size is not safety. A few centuries later, the same delusion returned, this time in America. The Civil War was not only fought with rifles, but with printing presses. The North issued greenbacks, paper money unbacked by gold. The South countered with graybacks, promises printed on desperation. Both sides believed they could fund war with confidence alone. At first, the new paper felt patriotic, the symbol of unity and cause. But every sheet that rolled off the press stretched belief thinner. Prices rose, salaries shrank. Merchants demanded payment in metal. Soldiers were paid in paper that lost value before they could spend it. Inflation devoured the war effort from within. When the shooting stopped, the paper died faster than the soldiers. Families carried sacks of notes that could not buy bread. The paper said, dollar. Reality said, dust. Paper floods, value dies. Hard assets outlive paper. Hard value survives soft promises. France learned the same lesson through revolution. In 1790, the monarchy fell, and the revolutionaries promised a new start. To fund their cause, they confiscated church lands and issued a new paper currency called the assignat. It was backed, in theory, by property, a guarantee of the people's wealth. But power cannot resist the temptation to print. Each new issue diluted the last. Prices spiraled, markets emptied. Farmers refused to sell grain for paper that wilted in their hands. The government passed laws demanding obedience, but you cannot legislate trust. By 1795, the assignat was worthless. The same revolutionaries who printed it watched mobs storm bakeries for bread. The paper that once promised equality became a symbol of starvation. Government can print paper, not faith. Faith once broken kills economies. Centuries later, the same pattern repeated, not in palaces, but in boardrooms. In 1997, Thailand's currency, the baht, collapsed under the weight of foreign debt. For years, Southeast Asia had borrowed in dollars, confident their exchange rates would hold. The boom was unstoppable, until confidence cracked. When the peg broke, foreign investors fled overnight. Debts that once seemed manageable doubled, then tripled. Entire economies unraveled in days. Indonesia, Malaysia, South Korea, all caught in the same chain reaction. Stocks vanished, jobs evaporated. Families who had trusted banks and governments watched their savings melt into zeros. The International Monetary Fund arrived with promises of rescue, but every bailout came with austerity. Currencies stabilized, but at a fraction of their former strength. What looked like salvation was surrender. Debt in someone else's money is a death trap. When the storm hits, debtors drown. Foreign debt destroys sovereignty. And then, in our own century, the pattern returned, not through kings, nor wars, nor revolutions, but through ordinary banks that people trusted to protect their futures. Lebanon, 2019. Hassan was a 42-year-old engineer. He had worked 20 years, saved $80,000, and believed his country's banks were as stable as its stone. One morning, he woke up and found the doors locked. The government called it a temporary measure. Withdrawals were limited to $200 a week. The exchange rate collapsed. His lifetime of savings shrank into dust on a screen. His daughter's tuition abroad was canceled. His mortgage remained, but his access to money was gone. He had not gambled. He had not speculated. He had trusted. Outside, crowds gathered with signs and broken glass. Inside, the institutions spoke softly about stability and restructuring. But trust, once frozen, never thaws. Deposits are loans, not treasure. Trust in the system is trust on borrowed time. Bank safety is a mirage. From Florence to Lebanon, the melody never changes. Only the instruments do. Each system promises permanence. Each builds faith from profit. And each collapses when that faith is tested. Too big to fail is a lie repeated across centuries. The names change. Barty, Lehman, Credit Suisse. But the rhythm endures. The illusion of safety is the oldest currency of all. And when the balance breaks, those who trusted the system become its victims. Collapse never begins with thunder. It begins quietly, in board meetings and policy papers, in the fine print of a loan. Then, all at once, the silence becomes a crash. The question is never if the system fails. The question is how many people still believe it can't. Every collapse feels unique to those who live through it. A new disaster, a failure no one could have predicted. But from a distance, the noise fades and the patterns appear. The empires change names. The currencies change symbols. The cycle remains. Beneath every crisis, beneath every panic and bailout, lies the same anatomy of decay. There are not 1,000 forms of collapse. There are only 3. The first is monetary collapse. It begins when money dies. Printing expands. Promises multiply. People convince themselves that paper equals value. Then the illusion breaks. Prices rise. Savings evaporate. Wealth escapes into things the state cannot touch. The second is institutional collapse. This happens when systems freeze, banks lock their doors, governments impose temporary measures, withdrawals slow, accounts vanish. The words remain familiar: stability, emergency control, restructuring. But behind them, the system quietly confiscates time and trust. The third is social collapse. This is when trust itself disintegrates. When people no longer believe that work will be paid, that laws will hold, that tomorrow will resemble today. The economy doesn't stop because money fails. It stops because faith does. Each collapse feeds the next. When money dies, institutions fall. When institutions fall, society fractures. Collapse is not one event. It is a chain reaction of trust breaking at every level, and each demands a different survivor: the saver, the skeptic, the builder. The saver preserves what is real when currency burns. The skeptic moves early when systems begin to crack. The builder creates when others only consume. History punishes the blind believer. It rewards those who see before the fall. Yet even now we act as if the next collapse will be different, as if it will ask permission. It won't. The next collapse will not roar. It will whisper. It will be silent. It will be digital. In the past, collapse spread through metal and paper. Gold lost purity. Paper lost faith. But now, money is made of code, and code can disappear faster than ink can dry. Central banks are building programmable currencies designed for precision, speed, and control. They promise modernization, instant payments, seamless stimulus, but code is not freedom. It is obedience written in numbers. A digital wallet can be frozen in an instant. A transaction can be denied by algorithm. What once required soldiers and vaults now needs only software. The same system that promises efficiency also delivers the most refined control ever invented. Code can freeze faster than paper can burn. Digital trust can vanish in a click. The illusion has not ended. It has evolved. The old world demanded faith in banks. The new world demands faith in code. Faith that the hands behind it will never close the gate. But history is clear. The more invisible the system, the more total its power when it fails. Survival must evolve too, not through fear, but through structure, not through retreat, but through preparation. History rewards those who turn awareness into frameworks. That framework has 3 pillars. The ALS principle. A stands for assets. Hold what governments cannot print. Land, gold, productive tools. Anything tangible, finite, and irreplaceable. L stands for liquidity. The freedom to act when others cannot. In every collapse, opportunity appears for those who can move, while others freeze. Liquidity is not just cash, it is mobility. The ability to act before the crowd even realizes the rules have changed. S stands for skills. The ability to create value when systems stall. The baker who still feeds a city. The mechanic who keeps engines alive. The coder who builds outside the gate. The farmer who grows in scarcity. In every century, they are the ones who rise while others wait for rescue. Assets defend. Liquidity moves. Skills rebuild. Together, they form the only structure history has never destroyed. Defense protects you once. Production protects you forever. These 3 rebuild empires. Real value is what cannot be printed. Collapse is not just destruction. It is a filter. When illusions burn away, the real returns to power. And those who understand the pattern, those who see beneath the surface, do not just survive history, they inherit it. Every crisis is a transfer, from those who trusted to those who prepared, from paper promises to tangible value, from the many who believed to the few who understood. Collapse isn't prophecy, it's rhythm. It beats through every century, repeating in a quieter form, wearing a different mask. We mistake it for surprise only because we forget the sound. Collapse returns whenever we mistake trust for truth. Whenever we believe that systems exist to protect us, not to profit from us. Whenever we trade awareness for comfort and preparation for faith. History never punishes blindly. It rewards observation. It elevates those who learn to hear the rhythm beneath the noise, the subtle pulse that signals the end of one age and the beginning of another. But patterns can be read, and if you can read them, you can rise through them. Every fall reveals what was false. Every collapse returns the world to what is real. The question is not whether money fails again. It always does. The question is whether you will rise when it happens, or sink believing it cannot. Reading patterns is survival. Seeing through illusion is strength. Every empire dies not because of war or famine, but because its people confuse trust with truth. When that confusion ends, the cycle resets, and those who prepared rebuild what the dreamers lost. Collapse is not the enemy. It is the instrument that renews value. It clears what was built on debt, on illusion, on borrowed confidence. It transfers power from the surface back to the source, from promises to proof, from noise to signal. If you have seen the rhythm, you already know its shape. It begins with silence, grows into panic, then fades into opportunity. Those who stand ready when others run inherit what remains. Collapse sorts belief from reality, and in that sorting, civilization rewrites itself. So ask yourself, when the next current breaks, will you be one of the many still trusting the system, or one of the few who already moved before it cracked? The difference is not luck, it's literacy, the ability to read what others refuse to see. Comment your country. I'm mapping how collapse rhymes across nations. Every story carries its own rhythm, and every rhythm carries a warning. And subscribe for the next episode, Proximity Compounds, 4 legal ways to move closer to the source. It is not about fear, it is about alignment, learning how value flows, and moving closer to its origin before the next tide turns. Trust is not bedrock, it is a bridge built on shifting sand, and every few generations the tide comes to claim it back. Collapse, transfer, survive, fade out slowly. 3 words remain like an echo: collapse, transfer, survive.